Hello and welcome to XM.com for the weekly outlook. I'm Christina Marujos and joining me today is investment analyst Mario Sanchkiriakos. As this whirlwind year comes to an end with the pandemic bringing the world to a screeching halt and the lockdowns with all the economic implications, you'd expect markets anticipating to say goodbye to 2020 and of course be hopeful that the new year has better things in store. So Marios, how do you see things shaping out for the markets in 2021?
Hello, Christina. What a year it has been, really. Besides the lockdowns, besides international borders closing, riots in America, crude oil prices turning negative, a lot of things happened. But on the bright side, we also had some relatively positive developments. For example, for the first time in a long time, central banks started working together with governments. And the resulting stimulus was the dominant force in the markets. It's why stocks staged one of the most powerful comebacks ever. It's why the dollar has been devastated, and it's also supporting commodity prices. It's surreal to me, but apparently even a deadly pandemic is no match for huge government spending and ultra low interest rates. Now, looking into 2021, I think this party is likely to continue. I think the dominant theme next year is going to be the reflation trade. The global economy will be healing its wounds, central banks will keep their foot on the gas, and governments are likely to continue spending like drunken sailors. This implies very favorable backdrop for stocks, for commodities, and any other risk-sensitive assets. Now, in the FX arena, it's a trickier equation. The overwhelming consensus is for a weaker US dollar. Markets believe that US inflation is going to accelerate faster than other nations, but because the Fed is going to be keeping bond yields and interest rates at very low levels, that's going to push real interest rates, meaning nominal interest rates minus inflation, much lower. And lower real interest rates argue for a weaker US dollar. So I'm on board with this narrative, but the catch is that much of this has already played out. We've already seen gigantic moves lower in the dollar, higher in commodity currencies, and several of these trades are becoming quite crowded. It doesn't mean that they can continue, it simply means that some of this has already been factored in, perhaps most of it. And my own worry is that all of this positivity hangs on the assumption that things will return to normal. That may be underplaying or understating all the uncertainties. I think there are still major risks on the horizon. For example, there's the potential for a series of small business bankruptcies once some of the government support starts to being withdrawn, or we might see a surge in unemployment, or even an eviction crisis in America because the moratorium is due to expire over the coming months. So there are quite a few risks out there, and I think that at some point the market is going to wake up to them, but that point might be months away still. The bottom line for the FX market, I think that Eurodollar, for example, could continue to head higher from here, but I also think it might have trouble crossing above the 125 level, for example, because if we get any piece of negative news, that could boost the dollar very substantially, given how negative positioning is on the US currency, and I believe that the ECB will probably defend the 125 level with a passion. Plus, on a more basic level, the euro area is in deep trouble economically still, but the US economy is doing much better, and I believe that at some point that will dawn on investors.
Now, Marios, let's turn to the main themes of the upcoming week. Brexit has been one of the main issues of the year, and yet here we are at breathing distance from the year-end deadline with still no trade agreement. The latest developments suggest the UK and EU continue to talk into the weekend to try and resolve the thorny issue of fisheries. Are we going to get a deal before December 31st?
Well, that's anybody's guess. We've been here, I don't know how many times. But yes, for me, a deal looks more likely than not. And let's explain. We've finally seen some progress lately. The final two issues are competition rules and fisheries. And we've seen some decent progress on competition rules, which in my book is the most important issue. Right now, the big outstanding issue is fishing. And honestly, I can't see a deal falling apart because of fish, of all things. Both sides are desperate to avoid the economic shock of a no deal. Boris Johnson is famous for taking negotiations to the their absolute breaking point. And, overall, I don't think fish is going to be the subject that derails this deal if we've managed to agree on everything else. Now, as far as sterling is concerned, I believe that the ultimate path is higher. I think that we might see a deal hopefully before the end of the year. And if so, that would argue for the recent rally that we've seen to continue a little further.
And now let's cross into the U.S. Talks for a new virus relief package have been going on for some time, and it appears that Republicans and Democrats are closer than ever to agreeing on a $900 billion package. Is that coming for the markets this Christmas?
Well, what a Christmas it would be if we get both a Brexit deal and a U.S. stimulus deal. The markets would be really happy about that. Yes, it seems that a U.S. stimulus deal is very close. The latest comments from the U.S. Senate Majority Leader, for example, Mitch McConnell, is that they are going to keep working right through the weekend until they get that deal. And overall, both sides are pretty positive that they will get there. So I think that's coming. I'm more confident that this deal is coming relative to the Brexit deal, for example. But the catch here is that most of this good news might be priced in. We've already seen the stock market rallying, the dollar falling every time there's a new headline about the stimulus deal, that the deal is coming closer. So it's either fully priced in right now or most of it is priced in, which for me suggests that once we get the confirmation, any positive reaction in the markets might be minimal, or we might even get a sell the fact reaction. This might give investors an excuse to take profits on the trends that we've been seeing over the last months, the stock market rallying and the dollar falling.
Marios, thank you so much for joining me today. This was the Weekly Outlook. Thanks for watching at xm.com.